Alrighty, welcome to another video. I do not own, first of all, the rights to the music here. God bless you. God bless you. You're welcome. And my name is Victor. I go by Unlimited Limitless, and also Brain Dead Vic when I make music. And it is another educational video here, specifically for the students of Insane Investments. God bless you. Want some water or something? Okay. Water always helps. So this video is basically just going to cover the range and a little bit of the trend terminology and forms of structure, I should say, in price action. When you're analyzing any market, you can identify range and trend. That's what we're going to go over here specifically. First is range. So there is some education, again, for you guys here, members. We are looking in the Education for Beginners channel. Still, I'm typing that. Don't worry about that. We'll talk about this more, and I'm still working on that. But anyways, and speaking of, so let me do this now. Cut. Okay, we're going to put this in a brand new note. Okay, save. And this is going to be notes from personal experience. Yes. Okay, cool. So the education channel here, Education for Beginners, you can go ahead and check this out. We talk a little bit about trend and range, and that's what this video is going to be added to. Okay, the YouTube playlist that's right up here, this link. You can find more videos. Again, if you ever forget, that's where you're at now. And then we'll be adding as time goes on. So here we have an example of price trading within a range. Okay, so a range really consists of a few key things. If you want to write them down, number them, whatever, take notes is probably the best thing to do. So what we have in every range is a high, okay, and we'll put that number one, it's right there, the H, a low, okay. You're gonna have support and resistance as well. It's supposed to be a 3. Meow. My kitty, you're so sweet. Where's the other kitty? Okay, so those key things, as well as a 50%. Let me not forget that. 5 for the 50%. Look at that. So those are pretty much the key things you're going to see. Outside of that, the next thing I would say is a manipulation. Okay, we'll just call this MH for manipulated or manipulation high, manipulated high. That is what I would identify. There's that same thing on the low end. If we were to have one, what we could say is this low created the trading range, this high created, or excuse me, this high still, right? Well, at first, right, created the trading range because it's higher than this high. And so until these get taken out, these are the highs and lows that will be manipulated. Okay, so if we wanted to identify it further, hey, you're gonna have to go talk to mom about food. Mom, you know what? You want to give them another cup? It was early this morning that I last fed them, and it's already afternoon now, so lunchtime is well underway. And we'll get lunch too later. But hey, go, get over there. Mom's gonna feed you. Go, good girl. She's so smart. All right, so Lord have mercy. We have low high, and we could say these are our initial low highs within this range, okay, before they get taken out. And once they're taking out, and what I mean by taking out is they are swept. What I mean by swept is there's price that goes beyond where that stopped. You see how price stopped here? See price on the far right? Well, this price was higher than that price. And so once that happens, we're no longer really focused on these in the way that we were. These aren't the full extent of our range anymore, right? Our range has gone beyond. And so what we could say is this is our first manipulated low. Okay, we'll leave the L. And this is our first manipulated high. And then again, you know, something may happen on the low or the high end to where that gets manipulated again, right? And so the key things that we have to focus on is our highs, our lows. Okay, 1, 2. Our resistance, our support, and so price ceiling versus price floor. And then the 50%, which is the halfway between really just the resistance and the support. You don't have to make it from high to low, because that's going to change really. Your support and resistance is going to stay pretty steady, as it's just a generalized kind of average of all of the highs and lows. Okay, does that make sense? So your average is when you combine it all, right, and then divide by how many there are. So finding the average ceiling and the average floor. What about is the most consistent floor and ceiling that looks good? Make it look good, because it should look good, because price can be studied and identified for what I believe to be the best looking setups. Okay, lowest risk, highest reward. So we begin with low, high. We find, as time goes on, okay, as we trade within a range, we find our resistance, we find our support. Okay, kind of again a generalized range. Doesn't have to be one price. You can make it kind of small block, an area as such, you know, of ceiling and floor, whatever works for you as you're starting. We find the 50% between that ceiling and floor. Okay, not necessarily between the high and the low, but between the general ceiling and the floor. We want the average. We want the most data as possible when we're finding stuff like that. Important stuff like, where's the halfway point? Okay, we're not just going to use a manipulation, or an outlier is probably another good way to identify. Manipulation is just kind of a weird word. You can use outlier, like, you know, where, hey, these are pretty within the range. You know, there's a respected high, respected low, meaning no lows extend it, they respect this low. No highs extend it, they respect this high. Until that happens, then you have what we would call an outlier. You could put, you know, O for outlier. Okay, an outlier high, an outlier low. It's something that's outside of the average, outside of the range. Okay, that's what we would call a manipulated or outlying high or low. And then support resistance, manipulated high low, 50%. From there, I mean, you really just want to identify where the best entry would be, right? How do I trade this? Like, I understand, okay, Vic, this is the range. Okay, you got highs, you got lows. Once that high or low gets taken out, you'll have a new high and low. But no matter how many times that happens, what we're going to find is a range. The fact is, price for the majority of the time stayed within a range. It stayed within this high and low, really, this entire time, right? And also this entire time, price had not taken out this high or this low until, you know, the next day is what this is, because we see this is Thursday, looks like July, this is Friday, July. So anyways, overnight, right, like price remained until, okay, morning happens, volume kicks in, people wake up, start trading as the market opens, and we get a new low, a manipulation of our previous range. The range was contained for, you know, dang near 24 hours almost, right? What time is that? 11 to, you know, yeah, 8 a.m., 9 a.m. So 20 some odd hours. And then you get the aberration, you get the outlier, okay? You get the weird manipulation. And once we re-enter that range still has the same high. Okay, so but I would say what we've started to do is kind of create, maybe, you know, you start out, your resistance is here, that makes sense. I think that's fine. It still works as you go. I said resistance, I mean support, excuse me. Your support could be here, right? That makes sense because you're dealing with, you haven't seen these other lows over here yet, right? We haven't got here yet. We haven't created these lows, right? So it's hindsight is 2020. I was able to identify the range after the fact, and we'll talk about the plays that we found towards the end of this trading range as it started to break out of the range more and more, and then we get a clear, decisive move for an extended period of time, which is ideal. A clear, decisive move, right, to the downside in this case. It happened one day last week or the week prior. So anyways, yeah, it was last week. So let's bring it back to home base. Sorry guys, I'm a rambler, you know, doing my best to get these educational videos out, and this is why I want one-on-ones. I'm much better at explaining to you in person when we're right there, not in person, over the live call, and we can, you know, communicate back and forth about the exact questions you have in the moment as I'm explaining this. So watch this once, twice, a million times, and then come to me for a one-on-one, right? As a student of Insane Investments, you are able to contact me privately, publicly, in the chat, you know, whatever, for an hour, 2 hours of my time, 3+, whatever, right? As many times as you need, so we can get you on track to understanding this stuff. But long story short, we are covering, just as a recap, as a pause, woosah, catch our breath, we're covering range, okay? That's what this is, all of this, right, going on in here. So within the range, we have high, low, manipulations of that, which give us, again, new range, really. But we measure that based on the average, and that can happen over time. You don't have to find trades every day if you're just starting out. You can paper trade this as you're building your range. And it wasn't really until today, I'll be honest, that I clearly saw the range. Sometimes it just takes 1, 2, 3 days to form, and the fourth day is when you take an awesome trade. But we did end up finding, hey, there was a trade you could have taken multiple times within here. But we'll talk about this example here and why that's a pretty solid one. Even though it's a small day trade, that's what I do, right? Scalps. It was a $2 move to the upside, 250, over the course of about 13, 14, an hour, right? That we're holding. So a day trade, not the quickest scalp, but a good little hold within a day. That's a good trade in there. Obviously, it would have been awesome to catch that, right? But here we go. So recap for the millionth time, because you have to get it hammered in, right? Like I've drawn this a million times probably. Yeah, well, no, probably not, but a lot of times. And that's how I've got it down. So low high of your range. Okay, they create what we start to see is like a ceiling. Like that high was respected, nothing took it out until the next day. Over 20 hours later, this low was respected until the next day, 20 hours later. Oh, this is over 24, by the way, for the high. But 20 hours later, oh, is it? No, it's not. It's under 24 still. Anyways, we create a floor. Okay, that's your support. We create a ceiling. That's your resistance. Write it down. We have highs and lows until they get taken out, and that's the new highs and lows, right? We can even call that a new high, a new low, whatever. It doesn't really change where our support and resistance lies, though. What you start to realize is, hey, we just may respect that more, but we still have a really, really, really consistent area where price just stops out and falls, right? So same with the floor, where price stops out and bounces. Then we have, after our manipulation, sometimes starts to become clear as well, between that average highs and average lows, the support and resistance, where our 50% is. Where's the halfway point? That becomes clear. And so on and so forth. So we want to now find trades within that range. And so that's what we'll talk about next. Recap that whole first half. It's pretty simple, all right? It doesn't go much more in depth than understanding the definitions and how to label and identify this, and then seeing it as a big picture whole, right? That's what really the skill is here, seeing the big picture whole, and then being able to do the easy part, which is like, hey, I know how to press a button, enter, and press a button to close once the move has happened. It's really just finding the setup that takes the effort and skill, right? So the analysis. So here we are analyzing, and let's focus on kind of the last full day, I'll say, that we're in this trading range. Okay, within this, again, between the resistance and the support, between the high and low, you can say, although based on where our 50% is, we're focused on this trading range. And any breakouts from that resistance and support, as you see, that's what creates our new highs and lows. So on Friday here, what we had done really in the morning, okay, is trade just under we're on the 3-minute time frame here, just so we can see more candles and understand it, and look for confirmation for entry as well. Right here for 3 minutes, first 3 minutes of the day, traded underneath the 50%. What I did in pre-market, and this is this blue line here, 50% is the orange line. Again, the 50 is halfway between the high and the low of our support and resistance, not our true high, true low. Sorry. Jeez. Okay. The blue line is my entry for upside. That's where I said, hey, I want to buy a call option contract if price holds above this blue line. Which again, 3-minute time frame here. This is 3 minutes in the market. The first 3 minutes of the day, we're underneath. Boom. The next 3 minutes, we're already above the next 3 minutes. So 9 minutes in now, we retest that blue level. And that was a quick little day trade to where? Look at that. Would you look at that? To the resistance, right? What I could identify there if I had taken entry here. And we'll do long position here as well. There we go. And that's awesome. It held stop loss. And we'll put stop loss. I mean, you could really put it with other support and resistance in here. Price kind of created a little ceiling in there. It popped up, but it rejected. That could have been our stop loss. So that's what I'm using there. What price did 9 minutes in is retest our upside level. That would have been my entry off of that wick, off of using the level, which was just a lower high in pre-market we used as our upside. Price holds above there, we might go higher, just kind of like we did back here. And that's exactly what happened, right? A quick trade, you could have taken profit at the resistance because you could have identified resistance with the days previous. And even if you didn't, price came back, oh no, but it respected our entry. Came a little bit below our entry, but I wouldn't, necessarily close because we never got confirmation. We didn't get a close above and retest like we see here in our orange circle, the close above and retest, right? Price closed above our blue level, and then price retested with a wick that, again, closed us above our level. So you could have entered on the wick, which is ideal, could have entered up here, but either way, you're in profit. Oh no, if you didn't take it, no problem. Price pulls back. There's retest of our upside level, and then continuation. Right, look at that. Price continued after the retest. Again, the secondary, third, you could say, retest to the upside. Amazing stuff. That is one way to trade the range in the morning. Once you identify 50%, high, low, manipulated high lows, where's my support and resistance? Once that's settled, and you could do that. You could have done that in pre-market as price is loading, right? Like, just using literally, if we don't even look at pre-market, all of this, I could have found, oh, there's a low. Oh, there's a high of this, Thursday, as we're trading within this range, because that's the key thing to notice here, right? As I'm finding those, is that we traded sideways, like we're in this kind of just block of price, and that doesn't always happen. We want to find trades. We could find trades within there, as there's multiple days here in time, right? And what we want to also find is a breakout from there, and that's where we get big moves usually. Right, like we got to the downside here, right before we entered that range, and it looks like there was, maybe we could say, a small little range before we broke out to the upside with a manipulation, fell back in, to test these highs, really, to test some type of resistance up in here, reject that, and sell off. So anyways, long story short, identifying ranges, so I could probably, find a range like within there, just using all of that price action. That's just a very, kind of larger range, obviously, so it'd be, there's tons of trades to take in there, but let's focus on this range again. So again, within this range, that's what I would spot first. Is like, hey, we're kind of just trading sideways. There's some sort of ceiling there multiple times that price hits and then sells from, right? We can see that price hit the ceiling, sold, hit the ceiling, sold, came back below the ceiling, sold. So once you notice that, if you missed all those, right, potential opportunities, because hindsight is 2020, which is fine. That's what you're supposed to do, is analyze the market to find these opportunities. Okay, great. Now let's look for where we can do it again. Look at that. We didn't even tap the ceiling, but that would have been pre-market sell-off. We realized that price has respected the high again. Here's our setup for going into Tuesday. We respected that high. If we don't take out this pre-market high, we're probably not going higher, right? And we didn't, and here's open. We reject and go lower. There, she already... Why are you mad? Why are you back over here? What's going on? Hold on.